Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at MP Materials.
If you find our talks useful, please consider subscribe, like, and comment underneath. It really helps us out.
So MP Materials. On the surface, it looks like a mining company.
Right. You dig stuff up, you sell it. Pretty simple. But this one feels different.
It's completely different. This isn't really a mining story. It's a national security story that just happens to involve a giant hole in the ground in California.
And that's the hook, isn't it? The massive geopolitical shift that's happening right now.
Exactly. The U.S. government is actively trying to break China's monopoly on rare earth elements.
And China's grip is, what is it, something like 90% of the global supply?
It's a stranglehold. And MP Materials, with its Mountain Pass mine, is literally the only scaled rare earth mine and processing facility in the entire United States.
The only one.
The only game in town.
Which brings us to the jaw-drocker fact I found in the filings. The Department of Defense. They aren't just a customer buying magnets for missiles anymore, are they?
Not even close. They recently became the largest shareholder through a $400 million preferred stock purchase.
So the Pentagon is an owner.
The Pentagon is a partner. It effectively makes MP Materials a government-backed entity. The government is signaling to the world, and especially to China, that this company will not be allowed to fail.
Okay, so let's get into the fundamentals of that. I saw them talking about their mine-to-magnet strategy. What does that actually mean?
Well, historically, they would just dig up the concentrate, the raw dirt, and then ship it to China for processing.
Which kind of defeats the purpose of being independent from China.
Completely. It was absurd. So mine-to-magnet is their plan to do the entire process on U.S. soil. Mine it, refine it, turn it into metal, and then manufacture the finished high-strength magnets.
For things like EVs, wind turbines, and I assume Tomahawk missiles.
You got it. And that DoD deal you mentioned is the key to making it all work.
The $400 million investment.
Yes, but it's not just the cash. The really crucial detail is something they call the price floor.
Right, I saw that. Why does that matter so much?
Because it completely removes the biggest risk in mining, which is commodity price volatility. The DoD has guaranteed a price of $110 per kilogram for NdPr oxide.
NdPr being the key ingredient.
The magic dust, yeah. Neodymium, praseodymium. So even if China floods the market and the global price crashes to, say, $80, MP Materials doesn't care.
They still get paid $110.
They get paid $110. The government makes up the difference. It ensures their cash flow is predictable and profitable no matter what China does.
That's basically a cheat code for a commodity company.
It's a massive advantage.
Yeah.
Now, financially, they're not there yet.
Right. I was looking at the Q3 numbers. Revenue was about $54 million, which beat estimates.
Yeah, which is good to see.
But the earnings per share was negative. They're still losing money.
They are. And that's because they're in this massive spending phase. They're building out that new Independence facility in Texas, which is supposed to come online in 2026.
So they're burning cash to build the future, basically.
Exactly. But the turning point is coming. Management has guided for a return to profitability in Q4 of 2025.
So just over a year from now.
Right. That's when the DoD pricing kicks in and the production really starts to ramp. That's the catalyst the market is looking for.
Okay, let's pivot to the technicals then, because the market isn't waiting for 2025. I was looking at the chart, and this stock has been on an absolute tear.
Oh, yeah. Up, what, over 200% in the last year?
Something like 229%. It's been trading around $67 to $69, and it just had a really clean breakout above $66 resistance.
So the structure is strong.
The structure's beautiful. You've got a classic pattern of higher highs and higher lows. It's holding above the 50-day and the 200-day moving averages. It's a textbook uptrend.
And even with that huge run-up, what are the analysts saying?
That's the interesting part. They're still bullish. The stock is trading about 14% below the consensus price targets, which are sitting up around $78 to $80.
So Wall Street sees more room to run.
It seems like it. What's the sentiment like? Are you seeing upgrades?
Oh, yeah, the sentiment is very positive. The consensus is a moderate or strong buy. William Blair just initiated with an outperform rating. We've seen upgrades from Morgan Stanley, BMO. The big players are on board.
And what about institutional ownership? Is this just retail hype or is the big money in?
The big money is definitely in. Institutions own about 53% of the float.
Oh, okay.
And we're seeing specific buyers, real long-term money. The New York State Teachers Retirement System has been adding shares. Udine Wealth Management, too.
Pension funds. That's always a good sign. They're not looking for a quick flip.
No, they're buying the long-term national security story. And the quantitative data on news sentiment has been strongly bullish ever since that government partnership news broke.
Okay, I have to play the skeptic here for a minute because it all sounds a little too perfect. Government backing, monopoly, great chart. What's the catch?
There are a couple of big ones.
I found one that really bugs me, insider selling.
Yep, I knew you'd bring that up.
The CEO, James Litinsky, and the CFO, they've sold $62.8 million worth of stock recently.
It's a huge number.
It's a massive number. So my question is, if the future is so bright and the government is guaranteeing your profits, why are the guys running the ship cashing out?
And that is the number one bear case. It's a huge red flag. You can try to explain it away. They're tax planning, diversification, but it's not a good look.
It's not. And the other thing is the valuation. The stock is expensive.
Very expensive.
It's trading at a price-to-sales ratio of about 48.
Which is a tech multiple, not a mining multiple.
Not at all. A normal miner is maybe 2 or 3 times sales.
Yeah.
So you are pricing in a lot of future perfection here.
You are. There is zero room for error. This brings up the second big risk: execution.
Right. Building magnet factories is hard.
Incredibly hard. If there are delays with the Texas facility, or if the 10X facility they're targeting for 2028 gets pushed back.
The stock could get crushed because all that growth is already baked into the price.
Exactly. Any hiccup. And a 48 PS ratio can become a 20 PS ratio very, very quickly.
Okay, so let's bring it all together. You have this incredible national security story with a government backstop. But on the other side, you have insider selling and a nosebleed valuation. What's the final verdict?
After looking at everything, I'd give it a bullish score of 8.5 out of 10.
8.5 is really high, especially with those risks. Why so bullish?
Because I think the thesis here is that geopolitics trumps everything else. This is a friendshoring play. You're not just buying a miner. You are buying America's supply chain independence from China.
And you think that macro trend is strong enough to outweigh the valuation risk?
I do. The DoD price floor takes the worst-case scenario off the table. That alone justifies a premium. And the turn to profitability in late 2025 is the next major catalyst that should, start to grow them into that multiple.
So what's the time horizon here? Is this a trade or an investment?
It's a multi-year hold, 3 to 5 years at least. You have to have the patience to wait for those factories to come online and start printing cash.
So the trade is high conviction, government-backed, but you have to watch for any execution delays like a hawk.
That's the summary right there. It's a fascinating story. It's really a bet on the future of American industrial policy.
It really is. A story we'll definitely keep following.
Absolutely.
All right, that's our deep dive on MP Materials. Thanks for listening, and we will catch you on the next one.